Tax havens are places where business people and other super wealthy individuals keep money in offshore accounts for tax avoidance and other purposes. Also known as offshore financial centers, these tax shelters are often small, low-tax jurisdictions in remote locations, like the Caribbean islands. In these places, wealthy individuals often hold money within shell companies and anonymous entities. Here are top 10 tax havens for entrepreneurs in the world. Number 10. Luxembourg. German banks notoriously take advantage of Luxembourg's tax environment, as the dividends of many companies are not taxed. Long-term capital gains on stocks are tax-exempt if a majority share is 10% or more is not held. By placing segments of business entities in Luxembourg, foreign corporations have been able to cut huge tax bills from their expenses. Luxembourg has become so notable for its tax laws that much of the country's attractiveness for outside businesses is owed exclusively to these features, and Luxembourg's economy is partially built around the business gained from its tax structure. The country may be put at risk financially if it is no longer attractive to outside businesses for these reasons. European policymakers have demanded the country alter its tax structure to encourage corporate and consumer tax revenue. Number 9. Monaco. Ideally situated on the French Riviera, Monaco is a tax haven particularly popular with the ultra-rich. In fact, an estimated one-third of the country's residents are millionaires. As a resident of Monaco, you can avoid personal and corporate income tax and capital gains tax. However, you must spend 6 months and 1 day out of the year in the principality to be considered a resident. Monaco is known for being discreet when it comes to its residents' financial information, so if privacy is top of your list, this could be a good option for you. Number 8. Denmark. Tax havens in Denmark are able to operate due to low transparency in information exchanges between tax authorities and banks. The real owner of a corporation or a foundation can be difficult to distinguish in Denmark, as is the case with limited partnerships. As of 1999, federal law was established to allow foreign entities to use the country as a jurisdiction for holding companies. Foreigners are allowed to hold 100% of shares in a Danish holding company and aren't subject to corporate taxes in this case. Other benefits of these companies include lack of restrictions for business activities, ease of registration, and low requirement for minimum capital. Number 7. Sweden. Sweden has disposed of a number of taxes, including inheritance taxes and gift taxes. Insurance bonds serve as unique investment vehicles that may be used by Swedish residents and foreigners who live in Sweden. In 2012, Sweden began offering something called an investment savings account (ISK) to its citizens. Rather than being taxed on actual income, gains, and losses, the ISK imposes a standard revenue tax on estimated earnings. This means you pay taxes even if your account dropped in value. However, you can also withdraw funds at any time tax-free. Number 6. Switzerland. Once a home for many anonymous banks that are no longer able to operate anonymously, Switzerland still serves as a popular tax haven, as the country adheres to secrecy in banking practices. Russia has also identified Switzerland as an offshore jurisdiction that refuses to share banking information on account holders. The Financial Secrecy Index ranks Switzerland as the third tax haven in the world based on its banking secrecy procedures and the amount of its offshore business. Switzerland's enforcement of tax laws has been conspicuously absent. The country has a long history of hiding funds, as it was the go-to hiding place for the upper class during the French Revolution. Number 5. Netherlands. Business taxes in the Netherlands are very low, as are taxes on interest and licensing income. The Netherlands attracted $84 billion in foreign direct investment in 2019, making it the largest recipient of FDI in Europe. With more than half of the Fortune 500 companies operating at least one subsidiary in the country, the Netherlands appears to be the most popular tax haven for U.S. companies. The Netherlands has boomed in corporate headquarters and subsidiaries for its treatment of multinational taxes. Number 4. Jersey. Jersey receives funds from England as a mainstay in England's tax haven system. The Crown dependency of Jersey operates under different financial transparency laws than most banking systems. It is notorious for banking secrecy procedures as well as general secrecy in matters of government and justice. The government charges no corporate taxes to companies, foreign and domestic companies, that are permanently established on the island. Financial companies are charged a flat 10% corporate tax rate, while large corporate retailers and utility companies pay 20%. Jersey does not tax dividends or capital gains. Number 3. Ireland. People who claim to live in Ireland but are not residents and hold a residence elsewhere are able to use its attractive tax environment. Ireland has a long history of offering low corporate tax rates to encourage foreign companies to relocate business on paper rather than physically. Ireland is host to a business tax rate of 12.5%, and artists enjoy a tax-free income. Dublin is home to the International Financial Services Centre, a financial centre that has served as a deregulated haven for both individuals and businesses. Foreign investment into the International Financial Services Centre weighed in at $2.7 trillion in 2014. The country has been host to quite a few shadow corporations attempting to take advantage of the low tax environment. Number 2. Germany. Foreign investors are freed from the burden of taxes on interest in Germany. The country retains the privacy of account holders. For non-resident corporations, foreign income is exempt from taxation, whether it is in the form of dividends from foreign subsidiaries or income earned in foreign branches. Corporations benefit from Germany's tax environment, as only 5% of dividends and capital gains have taxes levied against them. These classes of income are considered non-deductible operating expenditures according to German accounting standards. Number 1. England. England is considered the epicenter of the remainder of the world's tax haven systems. Foundations and trusts are typical tax haven vehicles foreigners use to offer a protective tax-free or tax-reduced wrapper around assets. The country is particularly popular with foreign billionaires who benefit from a lack of income or capital gains taxes on investments held outside of the country. London is Europe's tax haven capital for non-British individuals. The city's well-established banking systems are trusted and used by foreigners from nearly every country in the world. Individuals aren't taxed in the British Virgin Islands unless they are employed in the territory, while the Cayman Islands don't charge any individual income taxes. Neither territory has a withholding tax. This was all for today. Hope you liked the video. Don't forget to subscribe to our YouTube channel and hit the bell icon for more updates and notifications.